I last reviewed Zeta Global stock when it was trading at around $20 a share on November 25th, 2024. I rated the stock at a buy at that time, and unfortunately, the stock has underperformed. Is trading at around $13 a share today. So I'm going to review the company again. I'm going to share with you the biggest risks it's facing. I'm going to update and share with you my proprietary discounted cash flow valuation model, which reveals what I think the stock is worth today, and also look at valuation on a forward price to earnings ratio to see another perspective. And I will finally update my recommendation and let you know if I still think it's a buy or if I think investors should move on from Zeta Global and buy a different business instead.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the first category of risks I'll discuss are regulatory and legal. The company's practices have been compared to those identified as problematic in a recent FTC report, potentially exposing the company to regulatory risk. Data privacy regulations have changed and are changing, and the company needs to adapt and incorporate those, and it could impact Zeta Global's data-driven marketing operations. So, evolving advertising regulations may also require adjustments to its marketing strategies, which could put the company at a competitive disadvantage. The next set of risks are operational, and one are integrating the best of breed systems can lead to data quality challenges and operational inefficiencies for Zeta Global. Furthermore, managing a high volume of content demands with a small team has been challenging, leading to operating inefficiencies for Zeta Global. It has not been an excellent executioner of its business model. And coordinating a diverse team of freelancers has added complexity to the company's content production processes. And finally, security and data privacy concerns are front and center for this company. The company has experienced data breaches which have compromised customer information. It needs to ensure compliance with data protection regulations, and cybersecurity threats are always a risk, and even more so a risk for a company that has a reputation or needs a reputation for being able to protect customer data. Furthermore, it depends on third-party vendors for data processing, which increases exposure to security vulnerabilities. So now that we looked at the risks, let's look at valuation. So my proprietary discounted cash flow model incorporates several inputs, including estimates for the company's free cash flow for the next decade and the very long run, a weighted average cost of capital, the number of shares outstanding, total debt, non-operating assets, the capital structure, the capital asset pricing model, etc. I'm not going to go through all of those details in this video. If you want access to those kinds of detailed breakdowns for these discounted cash flow models, you can join my channel as a member. I have dozens and dozens of member exclusive videos at less than $5 a month. I think it's a steal. I'm going to focus just on the outcome of that model in this video here. So the intrinsic value calculation, or what I feel these shares are worth today, is $23.46. Now, the current market price is $13.35. The stock is trading near the 52-week low of $10.69. And so according to my discounted cash flow model, Zeta Global stock looks undervalued, looks significantly undervalued. Now, I like to look at valuation in more than just one way, right? That was my proprietary discounted cash flow model. And valuation, if you read my book, is one of the most important of the 6 things I look at when I'm evaluating a business. So I like to get more perspective than just one output for valuation. So I look at forward price to earnings ratios as another input to my valuation framework. And Zeta Global on a forward PE basis is trading at a forward PE of 19, which is near the lowest it's been, going all the way back to July of 2021. Briefly in January of 2024, and about a few weeks ago, it traded at a lower valuation, but the stock is trading at near all-time lows, not just in terms of the market price, but also in terms of the forward price to earnings ratio. And I get these from, I'm looking at finchat.io. There's a link in the description for a discount, right? So I looked at the business, I looked at its risks, I looked at the valuation across two perspectives, and the valuation looked very cheap, looked cheap on historical standards. It also looks cheap on when you're looking at the present value of all of the cash flow it's expected to generate. Measuring the company on risks, it's not doing great, right? We talked about the executional challenges, the operational challenges it faces, some of the data breaches, etc. And so the company does have elevated risks, as do most businesses right now, given the elevated global macroeconomic volatility. Demand for advertising, demand for all kinds of products are declining as a result of the tariffs that President Donald Trump introduced early into his presidency. It's making consumers more cautious, it's making businesses more cautious, and that's all leading to declines in activity. That being said, the stock price is already down significantly since the last time I evaluated this company on November 25th, 2024, as I mentioned in the introduction of the video, when I recommended the stock as a buy, and it's performed dismally since then. It was trading at around $20 when I recommended it as a buy. It's now trading at around $13. So this has not been one of my better recommendations, and not all of the recommendations will work out. But the difference between my channel and other YouTube channels is I record my recommendations and I keep track of them and I update you on how they've performed. I don't just go back to the ones that have worked and let you know, hey, look, this stock I recommended is now booming, and then avoid all of the ones that I recommended that don't end up working out, right? I go back and I share with you the ones that work out, and I share with you the ones that don't work out, right? I try to provide a lot of transparency. I try to provide a lot of information just to help you make decisions, right? My goal here is to help you make more informed decisions. And so now, with the lower price, elevated risks, but a much better valuation, what do I think about Zeta Global? I still think the stock is a buy. I still like the stock. In fact, I like it more today than I did in late November when I first recommended the stock as a buy, because the valuation is so much cheaper now. The valuation has, in my opinion, more than compensated for the elevated risks in the business right now. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.